Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from Forsys Metals Director of IR, Richard Parkhouse, and Pine Van Wyck, the in-country director for Forsys. Now, during today's webinar, they will provide an overview and outlook, and then we will take some questions. You can type your questions into the chat box at any time, and then we'll get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Forsys Metals webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on page 2 of its corporate presentation, and that can be found on the company's website, forsysmetals.com. For Red Cloud Securities, I'd highlight this webinar as for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Forsys Metals. So with that, Richard, Pine, why don't you guys kick it off?
That's great. Thanks very much indeed, David. Much appreciated. Great to be with you again. And we've obviously looked at the forward-looking statements. Thank you for that, David. So let me give you a quick overview of actually Forsys, the company. We're an explorer developer which has acquired 200% owned deposits, Valencia and Namatla, down in the Erongo region in Namibia. And this comprises the flagship name NORASA project. And we bought these between 2007 and 2010. Now, we're listed on the TSX since 2007. We've got a strong balance sheet with $13.5 million Canadian dollars in the bank without any debt. And if you look at our market cap, as of the close of Friday, we were about 152 million CAD. And the issue, though, that we have is that we feel we're significantly undervalued, trading at an enterprise value against resource of only $0.79 per pound. But I think, the key focus here is that NORASA is fully permitted in holding a 25-year mining license for the Valencia deposits. We undertook a 2015 feasibility study which showed the NORASA reserves as being 91 million pounds, which and together with compelling financials, which we'll take a look at a little bit later on. In 2022, we actually appointed a fantastic team down in Namibia under the leadership of Pine, who will be talking about his team and what he's been doing. But clearly, there's been a lot of reevaluation work that has been going on over the last year. And he really, I think, will go through that in a lot more detail a bit later on. So we feel we're in a really good position. I mean, nuclear power itself, nuclear is taking off. It's a really exciting market, I think, that we're all in at the moment. I mean, if you look at the WNA supply-demand reference scenario, there's been a political thawing across the globe where countries are restarting reactors, they're building new ones, making them safer. But the supply-demand graph that this shows is clearly widening as the secondary supply declines and excess inventory is being drawn down. So it is more important than ever for new primary production to actually come on tap. I think it's perfect timing for us. I mean, the price is rapidly improving. And if we go and have a look at the graph, we're back to pre-Fukushima prices already after this huge stagnant period where most explorers were put into care and maintenance during the period. Now, in fact, this slide is just a little bit out of date because obviously I think as of Friday we were up to near $81 per pound. So, it's even more exciting entering this bull market that we're in. Now, Our assets are in Namibia, which we think is a hugely safe, politically stable and low-risk jurisdiction. Very mining friendly. They've been involved in the business. It's their bread and butter for the last sort of 45, 50 years. And in fact, it's the third largest producer in 2022. In fact, over the last 45 years, on a cumulative basis, it's actually the second largest producer of uranium. So you've got Kazakhstan, Canada, and then Namibia. Now, I think the whole government regulation there has been working hugely effectively over the last many years. And so it really does support the growing mining sector there. And, you know, they are, we have strong relationships with the various ministries, which I think, you know, we develop stronger relationships by the day with a team that's now installed. So we've got huge uranium deposits at the NORASA. And if we look at this in a little bit more detail, we are potentially the largest permitted uranium project in effectively the world. We've got 91 million pounds of reserves, and that equates over a 15-year life of mine to 5.2 million pounds of annual production. So if you see how that interprets, it gives us the potential to become the 9th largest uranium mine against our peers across the board, which is significant. So we've got a strong board and management team. We've got significant mining experience on the board. If you look at the names to the faces, particularly I draw your attention to Martin Rowley and Paul Matisic, both of whom have built and developed significant mining projects over the last 40 years. And these are across different minerals, but also including uranium projects as well. Mark Fruin, who's our CEO, has been a mining transaction lawyer for over 35 years. And in fact has been a director of Forsys since 2006. So I think if we take a quick look at the 2015 DFS, the results were really pretty compelling. We talked about the reserves and annual production, but if we look at actually the pre-tax MPV, it's $623 million with an IRR of 32%, which is significant. And, you know, I think the net revenue, we're talking about 5 billion, operating cash flow of 1.75 billion. So really significant. However, I don't want to dwell on these because a lot of reevaluation is going on. These are old results. And I think Pine will run you through exactly what reevaluations have been taking place. A quick look at the capital markets profile. Our share price last week, at the end of last week, was 78 CAD. And in fact, our 52-week trading range was up to 0.79. We've got 195 million shares outstanding. And as I said before, our market cap is 152 million CAD now. We've got 13.5 million in the bank, so we're well financed at this point. We've got a share ownership, mainly institutional. We've got a big slug of retail share ownership, particularly across Canada. And so therefore, I think, you know, we've got good long-standing relationships with some of the larger institutions. So a quick timeline, if you will. The 2015 DFS was released, and then in 2021, where we all came out of care and maintenance, when the prices started to rise in uranium, we re-established the strategy. We enhanced the board. I joined the board in 2021, as did Jeremy Hangula down in Namibia. We completed a 13 million bought deal through our partners Red Cloud and Canaccord. And actually, the year after, we sold our gold EPL for approximately $8 million, which gave us the significantly strong balance sheet. But the most important thing that we did at that time was we appointed Pine to lead a project team in Namibia to actually start and re-evaluate all of the aspects of the feasibility study that took place in 2015. And it's on that point that I would like to hand over now to Pine, who can then tell you what they've been up to. And this really gets to be the exciting part.
Yeah, thank you, Richard. So obviously, the project was in care and maintenance basically since 2016 due to the low uranium price. And we've basically put together a team in Namibia, and that team was really tasked to dust off the previous feasibility study that was done and really look at all aspects of the project to see, what has moved on in time, technology-wise. Obviously, we've seen changes in commodity prices, steel prices. We've seen some inflation, but there's also opportunities that the team identified where we could potentially improve the project economics. So over the last couple of months, we've started with that value engineering, as if I can use that term, and we've focused a lot of effort onto a number of key aspects of the project. We've started with some geotechnical drilling to see how we can improve, our and optimize our open pit designs. We've started with trade-off studies to evaluate the leaching technology that we want to deploy on this project. We're evaluating a tank leach, which was the old 2015 approach, and we now believe that there might be a compelling business opportunity by changing the technology to rather a heap leach project instead of a tank leach project. So those studies are still ongoing. We have started with some metallurgical test work in laboratory, some column leach test work, and we hope to have some of those results coming out in the new year. So just to give you a feel for the team that we've appointed, we've got a core team of professional, experienced people based in Namibia and South Africa that has been involved in the Namibian uranium industry on a number of projects. These are people that I have either built with uranium projects in Namibia or built some other projects, people that have been part of a team, taking projects from early stage exploration all the way through to bankable feasibility. And we obviously supported by, a number of independent third-party external consultants and companies that supports Forsys to, assist us in sort of reevaluating our business case and preparing us for an updated feasibility study in 2024. As I've indicated, we've started with some geotechnical and some infill drilling. We're nearly complete with the Valencia pit infill drilling and geotechnical drilling. That will be completed towards the end of this year, and then in 2024 we will start to focus on the Namaplaas pit and have a similar program in that area. So as I've indicated, the objective for us is to focus on some RC and some DC and geotechnical drilling, and we've got a number of work programs that we want to try and finish, and as soon as that has been completed, obviously those results and samples will be submitted for third-party laboratory analysis, and as that will become available, we will then submit that to the market. We also have drilled quite a number of large diameter metallurgical samples, and those samples are being used for the ongoing leaching test work in South Africa at SGS Laboratories. So for us at this stage, sort of re-evaluating the practical layouts of the two open pits, with Valencia being our largest ore body, and the small little satellite Valencia East pit. Historically, it was thought to have the process plant sort of to the south of the Valencia pit, and an associated tailings dam under a tank leach scenario. Now our thoughts are that should we embark on a potential heap leach project instead of a tank leach, that we would rather place the process facilities in between these two large ore bodies, which is approximately 4.5 kilometers apart from each other. That will reduce the hauling distances and really optimize the on-site logistic and hauling cost for the projects going forward. Namibia is quite blessed with excellent infrastructure, and our project, if I maybe can just quickly scan back to that overview map, it's easier to just take us through that. Sorry for scrolling back. The existing uranium nuclear industry in Namibia has obviously, with 3 large operating mines in the area already, that being Rossing Uranium, the Husab mine, and the Lange Heinrich mine that has been established. As those mines developed over the years, the basic infrastructure of power, water infrastructure, road infrastructure, and rail infrastructure has obviously been upgraded and is an excellent condition, and it makes it, for any new projects, quite easy to tap into that infrastructure. So our project that is about 25 kilometers northeast of the Rossing uranium mine, we are literally 20 to 25 kilometers away from the main power line infrastructure in Namibia, the national east-west road infrastructure, and there's also a power line that runs literally parallel to that road infrastructure, giving us sort of a 20 to 25 kilometer direct access to our project, which will make our infrastructure, linear infrastructure cost, quite cheap to actually, service the infrastructure. We are also blessed with the Port of Walvis Bay, the largest port in Namibia, and quite a recognizable international and SADC port that provides a lot of logistic support, not only to Namibia, but also to the landlocked countries like Botswana, Zambia, and Zimbabwe, and as far as up to the DRC. So a port that is well equipped, understands how to deal with the chemical and reagent imports to support the uranium mining industry, but also are well equipped to deal with the product, which is Class 7 cargo uranium that needs to be exported, and that port has been exporting Rossing Uranium's product for the last 45 years. So truly an easy country to operate, well-established local infrastructure, and a low-cost hurdle to overcome to develop any new project and tap off the existing infrastructure. Let me just then get to our next slide. So if we look at our project licenses and permits, as Richard has indicated, we in essence have 2 main permits. The one is our mining license that is covering the Valencia ore body. And that, as he's indicated, is fully permitted. We've got our mining license, we've got our environmental clearance and all other related permits. So we can immediately proceed and start construction and mining activities, should we wish to do so. On the Nama Plus, we have a current EPL, and that's an exclusive prospecting license that we have applied for a renewal. And we do engage frequently with the Ministry of Mines and Energy. We expect that renewal to be issued in due course. But we've also, in parallel to that renewal, because we've already completed the feasibility work on Nama Plus, we have also applied for a mining license that is currently pending, and that that mining license, we are hopeful that we will be issued that within the course of 2024, which will then render the Nama Plus deposit also fully licensed. So, Richard, shall I hand back to you to cover our investment?
Yeah, very happy to. Thanks a lot, Pine. So, when we're bringing all of this together, what we want to do is, why would you want to invest in Forsys? Well, firstly, we differentiate ourselves by the fact that we are permitted already, and we've got huge government support from the Ministry of Mines in Namibia. Now, I think, you know, what Pine has just told you about the renewal of the Nama EPL, we're expecting a sort of Christmas present any day. And then, yeah, we've already applied for the mining license, which will ensue after that. I think the fact that we're amongst the largest undeveloped uranium projects in the world with the 91 million pounds really is significant. Now, 15-year life of mine with an annual production of 5.2 million pounds, all of this is being reevaluated. But that puts us from these results as 9th largest mine in the world if we went into production. And, you know, potentially there could even be a longer life to this, given the studies that are actually going on down there. Now, one of the key differentiators, I think, of our project is the highly experienced home team that we have recruited in Namibia under Pine. I mean, Pine hasn't really told you much about himself, but quite frankly, there is nobody more experienced than him in uranium mining in Africa. And, you know, he's worked at all of the big mines, both actually building the mines, both operating the mines, doing the feasibility studies. So there is nobody more experienced in the area. Now, the reality is this team that he's put together is an execution team. And in order to necessarily transition from explorer into producer, you need one of these teams to actually push it along. And we've got it. And so that, to me, is a huge differentiator. We've got a compelling valuation, I think, Forsys. But I think the issue that we've got is that we're so undervalued, which makes it exciting for investors to come in. As I said earlier on, we're trading at only 79 cents per pound of uranium, which is a 76% discount, actually, to the average of the global uranium developers. So we're at a space where, in fact, getting in is a really exciting thing. With tremendous leverage to rising uranium price. And in fact, if we look, I think we can see the graph here that the base of the 2015 DFS study was based upon a base price of $65 per pound. And that gave an NPV of $623 million. But in fact, an 89% increase would occur in that NPV if the dollar price actually increased by $15, which it has. So in fact, we're sitting around the $80 mark now, which has really increased our pre-tax NPV. So all in all, I think we are very, very well positioned. We're in a politically stable and mining-friendly environment, which is the second largest producer of uranium in the world. And in addition to that, we've got a very experienced management board, both in mining and capital markets. So I hope that has given you a good overview of where we are at the moment. And unless Pine wants to add anything further, I think it would be hugely sensible to open it up for questions, David.
Yeah, look, I think, Richard, from my side, as you've indicated, I've lived the upswings and the downswings in the uranium market since late 1990s. Both at Rossing Uranium, at Paladin, been involved in the Husab project, the Bannerman project. And from experience, we know that, this upswing in the market is going to ultimately result in a handful, of new projects that will actually be developed. And the question is, where are those projects going to be developed? Namibia has seen 2 new projects being developed in the previous upswing, that being the Lange Heinrich and the Husab projects, simply because our country is very pro-mining. It is supportive from the government. It is easy to permit projects in this country, and we've got an experienced uranium mining industry that any new project can tap into to resource and move that forward. We're going to see very little, resistance to develop new projects in our country, because our country really needs, the new development, and our government's really pushing that forward. So I would want to say, mark my words, in the new upswing, Namibia will see 2 to 3 new uranium mines being built, simply because we are well positioned, structured, and ready to move quickly on projects.
Great. Okay. Thank you very much, Richard and Pine. Great presentation as always. So we are going to kick off our Q&A portion of the webinar now. Reminder to everybody online, you can type your questions into the chat box and we'll get to as many as we can. So we already have a few questions here. Right now you have 2 large deposits, Valencia and Namib Class, 91 million pounds in reserves, and that's not resources, that's reserves. Have you explored any further resource expansion or M&A activity that might help this growth even further?
I think if I can take that question, David. So on the existing 2 properties, we do believe that the Valencia deposit has been drilled extensively. We do believe that there is some upside potential around the Namib Plus mineral rights, which is still in an exploration phase, and we will continue to do that. We have applied for a smaller adjacent license to the Namib Plus deposit, which we hope to also be allocated to in the new year. That might open up some additional grant to extend resources. And we constantly evaluate, further opportunities, within country. So yes, are we actively looking to increase potential resources? We are doing that, and we've got a clear strategy that we want to take opportunity at any opportunities that might come our way.
Okay. Your 2015 DFS is slightly dated, but still had a strong NPV and IRR at uranium prices that are much higher than today. Sorry, it was made at the highest price. It was done at prices much lower than today. I apologize. Why refer to pre-tax NPV and not post-tax NPV when you discuss that? I guess what's the corporate tax rate in Namibia, and should we expect any tax holidays?
Yeah, I think I can deal with that question. So the current mining tax rate in Namibia is 37%. That's the corporate tax rate for the mining industry. However, you do get the advantage that all of your initial investment, is written off over the first 3 years of going into production. So obviously any new large investment project starts off with a significant accumulated tax loss. And typically on a new project like this, you will not pay taxes, for the first 5 to 7 years, before you actually get into a tax payable situation. So we do not think that applying the tax rates has got a significant decrease on NPV numbers as a post-tax, simply because in the early years there's no real tax payable.
Okay. And you are in the process of updating the DFS. When should we expect an update to that study?
So, David, as I've indicated, we are busy with certain metallurgical trade-off studies between tank leach and heap leach. As soon as we've completed those studies, which we hope to crystallize out, early in the new year, we will then freeze the scope, and then we will instruct our engineering team to proceed flat out with updating our feasibility studies. Obviously, we do hope that uranium prices will continue to move in a northern direction, and all of that will, assist, the economic outcome of our updated DFS.
Yeah.
Now, you mentioned heap leach, and it isn't that common in uranium. I think it's been used a little bit in Brazil and the U.S. What makes you believe that this might work at NORASA, and what are sort of the pros and cons behind that?
Yeah. So, okay, let's start with the why do we think about that as an alternative? So the Namibian primary uranium deposits, and those I mean the Alaskite-hosted deposits like Rossing Uranium, Husap, and Bannerman, all have evaluated heap leach technology over the last 5 to 7 years. Rossing Uranium has in fact run a 2-year pilot program, back in 2011 to 2013, and showed very successful results treating their low-grade stockpiles. And it's from recent engagement with them, it sounds like they're now pushing ahead to move that project into a commercial venture to supplement the existing tank leach. Husap Uranium has done exactly the same, and Bannerman is a new project that is done extensive pilot heap leach test work and developing their project over the last 6 to 7 years. In fact, I've actually built their pilot plant for them that they've been using over the last couple of years. So, and their business case is based around that. So, a lot of things is improved technology-wise on heap leach. The Alaskite-hosted uranium in Namibia is known to be trial and tested extensively, and I think for us it's pretty much confirmatory test work that we're doing, knowing that we might get similar or even better results compared to the other projects.
Okay. You mentioned Husab, you mentioned Rossing, which has been in production for 55 years, Bannerman's Zatango. These are all similar type deposits that are nearby, yes. The same sort of Alaskite uranium deposit for those watching.
That's correct.
So, okay. Is there any other ideas that any of those operations or projects bring forward, besides the tank leach, heap leach decision?
There has been some nanofiltration technology that's been tested and trialed at the back end of the solution recoveries to try and retain some of the expensive reagents like acid and other reagents that you are putting into the process and recycle that. Those are some of the technologies that's also on our cards to include in our DFS as trade-offs.
Yeah, because NORASA is on track to be a top 10 uranium mine in the world, potential production of 5.2 million pounds a year. Would heap leaching allow you to maintain that production rate? Is there a trade-off here between production rate, recoveries, costs with heap leach?
So, David, what we are working towards is obviously heap leach is known to reduce your initial capital investment, because with a tank leach operation, you obviously have to install milling capacity, expensive tank leach, and liquid solid separation technology in the format of either filters or CCD circuits. So we do expect a reduction in the capital cost by going the heap leach. We also know that you will save water and power and some other reagent costs like flocculants going down that processing route, and that could even reduce our operating costs. Yes, we do know that there will be some sacrifice on overall recoveries of the uranium, but those will most likely be offset by the benefits of reduced capital and operating costs, and that's exactly the trade-off that we are doing at this point in time.
Okay, stay tuned for those studies. Okay.
Exactly.
Question about permitting here. Now, why do you have to file a new environmental and social impact assessment in line with international standards if the mine is already permitted right now?
So what we've done is obviously our environmental clearance was received already post the 2015 DFS, and by Namibian law, every 3 years you need to apply for the renewal of your environmental clearance certificate, and we just want to make sure that we keep up with international best practices, because that's let's call it a moving target in today's world. So we've just recently received our current valid environmental clearance certificate, and over the next 3 years, we will be reviewing that according to international standards, and if there's any amendments that we need to do in our next filing, which will happen in about 2.5 years, we will make sure that we include those and drive that world's best practices.
Okay, so beyond that ESIA, do you anticipate NAMAB license prior to construction, and are there any other licenses or permits that you really need before you break ground?
On Valencia, we basically fully permitted. On the NAMAB, as I've indicated, we need to get our mining license, and that is application and process. We do stress with our government that it does make a lot of sense for us to be able to process these two mineral deposits, at the same time and get the economies of scale. And I would really want to see that, by the time that we finalize our DFS study, that once we submit that to our government, that shortly thereafter, our NAMAB license will be granted as well.
Okay, so you want to see that NAMAB license before you're even moving ahead with Valencia at all? It's one big project.
Well, we're not dependent on that. I mean, we can start with Valencia and start processing that, and if NAMAB is 6 months, 18 months, 24 months later, that won't really change, our overall deposit. I mean, the balance between metal in the ground is about 70% at Valencia and 30% in NAMAB. So even if we do start a little bit later, on NAMAB, we'll basically finish, those deposits at the same time.
Right. Okay. You mentioned your treasury had about $13.5 million in it. What's your current budget through completion of the DFS, and what's the timing on the DFS?
So, David, on the we obviously have already quite a well-defined project process. The only big change that we will make is only around the actual tank leach or the heap leach. So our comminution circuit is not a big change there. the back end of the uranium recovery. There's not big changes there. So we're pretty much not doing a DFS from scratch. There's a lot that we are just updating to current prices. Yes, around if we decide to do go with the heap leach, yes, there will be some more detailed engineering required around that, but it's a lot less than designing a complicated tank leach, milling, and liquid solid separation technology. So according to us, we are well funded to finish our DFS at this point in time. Yes, we will do an interim financing, I do believe, around Q2 next year. We are still evaluating, the structure and the options around that, just to make sure that we don't run bone dry. But we target to try and push out our DFS, by the middle or Q3 next year. That's sort of our realistic target. We're obviously trying to move as quickly as possible because we know the uranium price is moving, and we definitely don't want to miss the wave in this upswing in the market. Our project as we sit today is an economic viable project, so we need to get our ducks in a row, arrange the funding, and get moving on the project.
Right. Okay. Just a couple more questions. Does Forsys need to fill any further holes in this technical or management team at this point?
Look, once we move the project, forward into an execution phase, at that point in time, we will start to appoint more permanent employees that will move the project forward. At this stage, we have sort of a team of fixed-term specialists and contracts. I'm confident that we will, be able to fill up that team. There's always, new, exciting youngsters that wants to move into new challenges and experiences in country, and we've got a big pool, with existing, 4,000, 5,000 people that's deployed in the uranium industry in Namibia to draw from those projects. And I've got a lot of guys that has worked with me on all of those projects, and I can go and tap on the shoulder and pull and put an excellent team together.
Okay. Nuclear utilities, they love companies with large, long life deposits, as they want really consistent, dependable deliveries. And uranium prices certainly are rising very quickly here. WNA said in September that there isn't enough uranium for everybody out there. Has Forsys had much contact with potential customers at this stage of development?
Richard, I'll leave that to you.
Yeah, absolutely, David. And, clearly we've been talking to people, but what we don't want to do is actually move on anything at this point in time, given the fast-moving market that we're actually in. And I think, as Pine said, getting our ducks in a row is building relationships with people unequivocally. But actually, there's more work that we need to do first before we lock anything in, which seems absolutely appropriate.
Okay. You say you don't want to move anything forward right now on the contracting front, but do you think that's something that's going to be necessary in order to attract debt financing here? And do you have sort of...
Potentially as some part of it, without question of a doubt. Yeah. And, it's been fascinating talking to people when we were in Toronto recently with you, and also in New York, and likewise actually at the One-to-One conference in London. And it's people are very, very targeted here, and it's interesting to see what can be delivered. I think people are really beginning to see our story, and it coming together, coming out of the sort of sleepy care and maintenance period that we were all pushed into, and actually now seeing us beating the drum and actually putting this team in place. I think that adds huge credibility to what we're doing. And, that meant significant amount of money actually going into the Namibian economy as well. And I think, long contractors also see that. And, I think clearly a part of any financing arrangement in the future would be different components of potentially equity, debt, and also, on offtake.
Right. Okay. Well, thank you very much. Let's wrap it up there. So Richard and Pine of Forsys Metals, thank you very much for speaking to us today.
Well, thank you very much for hosting, David.
For sure.
Thank you, Richard and David.
Thank you, everybody else, for tuning in. Reminder that Red Cloud, we will be back on Friday when Taylor is going to sit down with New Pacific Metals. So that's December 1st, and December already. That's at 2 p.m. Eastern. So have a great day, everyone. Thank you.